थोड़ा सा टाइम लगता है to go live from the software. Guys, if you can see us, just say hi so that we'll know that we are live. Oh, great, we are live. 50 people are watching already. Take care.
Great to see
Thanks a
you.
lot for joining us, Aman, and thanks, guys, for joining in. Sorry for the delay. We were just, preparing for the live. It got delayed by 24 minutes, but nevertheless, this session is going to be super interesting because it's going to be about cryptocurrencies, right? It's going to be corely about cryptocurrencies, about different coins that you've been hearing about: Shibu, Bitcoin, Ethereum, Tether. We're going to talk about a bunch of them. What's like how these coins came about, what's the evolution, where Aman is seeing them go. And before that, let me, maybe ask Aman to give a quick introduction. For me, Aman is like one of the go-to people when it comes to cryptocurrency. He's, one of the smartest people that I know in the space of cryptocurrencies. But it'll be great if Aman, you could give a quick intro.
Sure. Thank you so much. I'm an engineer by chance who started the journey in the crypto space way back in 2015, late 15, early 16. I've been following it from the right after the college days. So I started my journey with startup, worked in different corporate and enterprise, and happened to work with Google as well on the Google Hotel at Steam. So, cryptocurrencies for me was a combination of learning once again right after the college, and I think I learned from the community more than from the internet. So, my background is I'm an engineer who have taught 10,000 plus people on crypto and blockchain. I'm a TEDx speaker. I've started my first blockchain startup way back in 2017. We built products in the area of identity, document, and payments, expanded to about 4 different countries, scaled that team from 3 to 35 plus people, did $1.5 million kind of a revenue. Then second startup was into the edtech space where we were building the platform to bridge the gap between industry and academia, because in India, a large number of students graduate from engineering college, and only 20% of them are employable in emerging technologies, and 80% of them don't really have the skill set. So we built a platform to bridge the gap, and specifically talking about blockchain, AI, IoT. We did good. We did about like 5,000 plus people in the community. And right now, what I'm building is we are building a social investing platform into the crypto space. So think of it like Twitter for crypto investors, which will be the destination. Why we are building it? Because in February, me and my co-founder have personally lost about $40,000, which is close to about 1 Bitcoin, and that was a light bulb moment for us to actually find a verified knowledge investing platform so that we can amplify our decision in crypto space, because exchanges have done their best to democratize investing and trading, and we at Moving wanted to democratize the investing knowledge, and therefore we are building this platform to enable next 10, 50, 20 million people in crypto space.
So the way you describe it is Twitter for cryptocurrency traders, right?
Twitter for crypto investors, yeah.
Got it. That's
We don't want it
interesting.
to enable the trading. Why? Because trading never yield you in the wealth generation. Trading never makes a wealth for you, and investing for long always gives you sustainable income for a period of time. And that is it's a valid from, if we try and compare the nature's example. If you try and make the tree grow quickly, then it will not really sustain for a longer period of time. If
Yeah.
you let actually tree grow with the right kind of a nutrient ingredients, it will have the wide trunks, and the foundation will be very strong, and the tree will be there for many many years. So the idea is to enable people in crypto investing by providing the right kind of a knowledge and bringing in the verified community so that people can learn from each other and go invest along with their friends.
Makes sense. So let's start from the roots of cryptocurrency, right? I think the coin that started all of it was Bitcoin. Back back in what year was it? When was the paper published? 2008.
2009.
Okay, 2009. So that's what kickstarted a lot of what we see today. Could you tell people about what exactly is Bitcoin? Like, apart from the thing that we see on marketplaces and trading platforms, how did Bitcoin come about? What was the pieces behind it?
See, you need to understand human beings are a network species, and we operate in groups, and we always work in groups. We are like ants and bees in that sense, and we cooperate to do anything interesting, like the community event which we are doing it today. But we are a unique species in that we cooperate with each other, have a genetic boundaries. So we wanted to build these networks, and these networks have a history to be governed because these networks have rulers, and we have clearly seen from the past kings used to rule, then a president era, then the rulers start changing, or we have an elite aristocracy in change, right? And if you just fast forward, these rurals start dominating the network, and they don't really give you the flexibility to operate. So electricity is a network, the phone system is a network, and India is a network, United States is a network. So it's very important to actually understand who runs these networks. And these last 100 few years, these networks were being largely controlled. So 2008 financial crisis happened. We all know that. Lehman Brothers collapsed. There was a bloodbath on Wall Street. So this person or group of people actually came up with a concept which started challenging the financial system. In a way, they said there is a decentralized form of a currency which can operate without the central institutions. So right now, what happens? The government print the currencies, and if you have to transact, you either transact through a check, wallet, or maybe doing some kind of other mechanism, IMPS, RTGS. Your bank validates these transactions. Then banks actually charge your fees to validate these transactions, and banks update these transactions in their database. So this person came up with a concept that right now across the globe, over 2 billion people don't really have the financial institutions access. Can there be not a decentralized form of a currency or a money which can be operated on top of an internet, which is in such a manner that it's immutable? Everyone can see what all transactions have been made. And the best part about this currency is it's having a fixed supply. Because what happens in your fiat currency, you don't really have a fixed supply, which is why we have went through a change in the habit through a demonetization. That is why the inflation happens. So Bitcoin is a famous start to the Web3 economy, or a decentralized economy, and that was the first application to disrupt the banks and come up with a decentralized form of a currency where people can operate from their wallet, people control their wallet, and actually Bitcoin lets you to be the CEO of your own bank. So that was the year when 2009 was the year when Bitcoin white paper was published, and people started getting to know about cryptocurrencies and the underlying technology, which is blockchain.
Got it. And then why did it become popular or so
Okay,
popular?
so if you look at the technical description in the Bitcoin white paper, was the first document, an outline of the principles of cryptographically secure, trustless, peer-to-peer electronic payment system. And at that time, world was already grappling through a financial crisis. This document was a sort of a foundation of the digital currencies powered by distributed ledger technology. How it became popular, I think the initial time there was a lot of people who were trying to build an adoption. I don't know if people have read about, somebody have used 10,000 bitcoins to buy two pizzas, and now we celebrate the pizza day. It was in May. So the adoption started increasing. And if you look at from the parallel of Metcalfe's law, which was in telecommunication, it says that the more people join the network, the value of the network increases. So the Bitcoin actually came not only from the adoption in terms of a currency, but also from the adoption of earning money to keep up the network alive. So why it started getting popular? The miners who actually keep up this network alive have also an incentivization to be a part of the network and start earning this currency. How do they earn? That's a process of mining. We can talk in detail as we go further. And the people start adopting this currency not from the store of value, but also from the utility transactions. And these utility transactions start happening. Somebody was buying coffee, somebody was buying some kind of illegal stuff on Silk Road, somebody was doing some transactions to buy pizza. And the more adoption start increasing, and the people start looking at this as a utility. And on the other hand, the price started shooting up. So I think 2011 was the year when Bitcoin actually hit $1. Now imagine if you would have bought 100 Bitcoins that time by spending $100. Right now you would be sitting on $3 million,
Yeah.
right? So that's the kind of a success. So Bitcoin success or how it started getting more popular, number one was the price. Second was the adoption. Third was the more miners started joining in, and they had an opportunity to earn these cryptocurrencies by doing mining by having their hardwares in place.
Understood. And I think before we move on to other types of cryptos, we can, sort of deep dive into mining. What is crypto mining and why is it necessary?
So mining is an activity to actually keep up the network alive, right? So since there are no central institutions who actually make this technology possible and keep it running, so there are group of people who actually makes these transaction valid. So right now, what happens? Let's take an example. You sign a check, right? You write my username or you write my name, you write an amount, and then you have the signature. So if I have to do a parallel, your name, who you are sending it to, or recipient becomes the username for somebody or a public address. Your signature becomes the private key. And the same check you deposit in a checkbox. The manager picks that check, try and validate the transaction, seeing that the balance which you're trying to send, if Harish is sending me 100 rupees, that 100 rupees is there in Harish's account. If he's sending it to Aman is a part of a network. And then the signature which Harish has used is actually the right signature. So in this case, if you are transacting these transactions and if you're sending a money onto the network, there has to be somebody who validates these transactions, right? For somebody to validate these transactions, there has to be, since there is no central institution. So the networks are designed in such a manner that you have the group of people which are called miners, and these miners rent out their electricity to actually solve a problem. And this problem, when the Bitcoin and every other network was in the initial phase, the problem was very simple. So think of problem like 4x is equal to 100 when Bitcoin was started. The value of x is easy to find, which is 25. And over a period of time, the algorithm is written in such a manner that the problem gets difficult over a period of time. So right now the problem is 4x cube divided by under root of something multiply by something. And now when you need to find the value of x, you need to use the computing power. So when the problem was easy, you could compute it on your laptops. When the problem started getting difficult, then you have to use the higher hashing hardwares. Then the miners switched on to GPUs, and now there are specific hardware devices which are called application specific integrated circuit. So mining is nothing but an activity to keep up this network alive, and the miners are the people who validates these transactions. In order to validate the transactions, they get a block reward, which in case of a Bitcoin, when the Bitcoin network was started, the block reward was 50 Bitcoins by validating each block. And this block reward gets half after every 4 years. So 2009 to 2013, the block reward was 50. 13 to 17, the block reward came out to be 25. Then from 17 to 21, which the halving happened this year, the block reward went from 12 and a half. Now the next block reward would be 6.25, which means the miners will be getting the less bitcoins as they start validating the blocks. And the difficulty of the problem increases after every 210,000 blocks. And these blocks are nothing but the check boxes which you can consider. Each block has different transactions. Correct? So in case of Bitcoin, the block size is 1 MB. So the miner will validate a transaction. Now, if you wanted to ask how do they validate a transaction, it's like I put that transaction onto the network. And when I'm putting the transaction onto the network, I attach the transaction fees. The transaction fees goes to a miner who validates this transaction, and somebody who validates the block, which means the transactions of transaction, gets the block reward.
Got
Correct. So
it.
there are group
And
of
then,
people who mine these transactions and keep up the network alive
mm,
in order to achieve the true decentralization, in order to achieve the 100% democratization of the transactions.
and as a reward, they're given X number of Bitcoins to keep it
Yeah.
alive.
So each network has different rewards. So this type of mining is called proof of work. So it requires electricity because you have the mining hardwares, and mining hardwares uh, requires electricity to work. And these mining hardwares also generate a lot of heat, which is why you might have heard that Bitcoin is not 100% environment friendly or renewable. In terms of the principles which we are reading these days, the sustainable development
Tesla
or green.
recently removed it.
Yeah. So why Tesla removed it? Okay, that's another conversation because the coal mining was happening. Because in order to keep up the network, you either require electricity, which you can produce it from thermal or some other resource, or you produce it through non-renewable resources, which are like coal and other stuff. So that was dangerous. So since Tesla is more into renewable and empowering the systems through electricity, so I think that was a big question. So mining is nothing but in a nutshell, is an activity to keep up the network alive. And all those participants get a reward to validate the transaction. Like in case of your bank gets a part of the transaction fees. The miners get a part of your transaction fees value attached with the transaction. Somebody who validates the block, in order to validate a block, you find a random number which is called nonce. And once you found that random number, you validate amongst the other people. That is why you call it a consensus. So consensus is validating that nonce which you have found it from the other participant, that yes, the value of X which I found it is the correct one because it actually matches the previous hash of the block. So these blocks are nothing but, if you wanted to understand from a layman perspective, it's like train coaches. Correct. So each train coaches are linked to each other, and in each train coaches you have different berths, which are like number of transaction. Correct. And each transactions have to be validated by a person. These transactions are like, if Aman sends you one Bitcoin, then this is one transaction. Harish sends one Bitcoin to Saransh, that's another transaction. So these transactions are coupled in a systematic manner. And then finally you get a block, and then block gets added to the chain. That's why you get a blockchain.
Oh, interesting. And how can someone become a miner? I've seen a bunch of my friends download few apps which sort of take up the computation power of their phones, just almost burn out their phones. Like, how does one become a miner?
So right now, mining is not feasible of the major cryptocurrencies since they have the hashing power associated with that. So it's like Sudoku problem, right? When the initial years were there, the Sudoku problem was easy. But over a period of time, as more and more people started utilizing the network, the more number of people started become a part of the network, the problem has got difficult. Now, when the problem has got difficult, you need to have the larger infrastructure to mine these transactions. So to mine a transaction for a Bitcoin, you require an application-specific integrated circuit. It cannot happen on mobile phone. The application-specific integrated circuit has a 16 terahashes per second or per minute, right? This hardware costs you $3,000. Correct. So,
Oh.
and this one hardware would be able to produce a single Bitcoin in maybe possibly 2 years, 3 years down the line, depending upon the probability you would have. So people
Mm-hmm.
don't do a standalone mining these days. People do a pool mining.
Mm.
So which means I become a part of somebody's pool and I rent out my hardware. So if I am contributing to a capacity which is 10%, so if the block reward is 20, then I would get 10% of 20 because I have contributed 10% of my hardware. So you can do a cloud mining, which means you can buy the subscription of those mining farms, which are actually doing mining at a larger scale. And you can start paying them subscription fees and they'll start
Mm-hmm.
giving you a reward. Or second is you can become a part of the pool mining where you have the hardware, but your probability of getting each and every transaction is very less. So therefore, you rent out your hardware, and whatever percentage you rent out, basis the probability of getting the block reward, you will be compensated.
Got it. So it's not a very lucrative thing that it was in the past,
At
right?
this point in time, no. There are a lot
Makes
of
sense. Mm-hmm.
smaller networks where you can do a mining, but at least you would still require a GPUs. If there are gamers who are listening to us, maybe they have some GPUs. They can actually use those GPUs to mine the not so popular coins.
Mm-hmm.
And if the price increases, they can still be rewarding. Second is you can actually purchase cryptocurrencies, and over a period of time, if price appreciates, then it's a win-win. I don't have anything to say about Pi network. I think there are questions. I
Yeah.
think that's another mineable currency which happens on mobile phones. Haven't really explored much about it, but yes, that's one of the use case. So ultimately, mining requires the CPU or a GPU. Your phone already has a CPU, so you can mine these transactions.
Got it. A lot of people are asking for the giveaway, so I think at this point in time, if you wanna get into the details of it,
Yeah,
I've
sure. So
shared the website link on in the description, and it's a pinned comment as well, so you guys can sort of click on it.
great. So we are giving two types of rewards. So if you go to moving.so, you can find one is like you can surprise your friends, you can give free cryptos to your friends, and these are dummy cryptos. And the best reason you would write on this surprise friends kind of drop, which we have already made, and the couple of best reasons we will reward with 5,000 rupees of bitcoins or the cryptos of your choice. Second is the meme competition, which is live onto our Instagram, so you can go on moving platforms Instagram. I think you would find a link on the chat. My team is already there. If not, I think I'll send the link to Harish, or you can find it on moving.so Instagram page. Just a second. Okay, I'll just see if I can find it here. Yeah, so you can go over here, and then you would see a competition which is active over here, and which is a meme fest. You can create a crypto meme and just tag us, and if we find your meme which is interesting, we will give you additional reward up to $500, which is about 35,000 rupees. And we will keep this competition active until the end of the coming week. And second is you can gift free cryptos to your friends, which is by going on the website. So these are the two competitions which we have. In this competition, you have a chance to win up to $500, and in the first one, you have a chance to win up to about $100 worth of cryptocurrencies.
Wow, $500 for making memes. That's crazy.
Yeah, yeah. So more
Cool, guys.
memes, the better the chances. And
Yeah.
I'll just resume. Yeah. Sorry. Great.
All right. So that's how you guys can participate in the giveaway. So maybe you can just give a summary of what are the two ways of participating.
The summary of other two ways?
No, the two ways of participating. One of them was the meme competition, for which you'll have to
Yeah,
visit
the
the
one of them is
Instagram
the meme
page.
competition. You go on moving Instagram page, and there is a hashtag memes with moving. You can create a crypto meme. It could be any meme. Just don't be very cheap around it, and just tag us. And if we find the meme is interesting, we will have a chance to reward you $500 worth of cryptocurrencies, and the cryptocurrencies of your choice. Second is you go to moving.so website, and then there you would see gift cryptos to your friends. And while you're gifting cryptos to your friends, you can add any interesting reason that why you are gifting it, whether it's the technology you like, whether you have some kind of a past debt to clear, or the better the interesting reasons are, the higher the chances for you to win up to 5,000 rupees of cryptocurrencies.
Awesome. Thank you so much for doing this. And let's move on to a couple of other questions that I had. Now, we spoke about Bitcoin, and recently Ethereum started picking up, right? A lot of applications are being built on Ethereum. It's allowing developers to build a lot of applications. So, what was the origin of Ethereum? And, a lot of my friends say that Ethereum is soon going to beat Bitcoin in terms of popularity. Do you think that's true? We'll discuss that after discussing its origins.
Sure. So, what if I told you about a business which is strong network effect and has 200x year-on-year revenue growth, and it is preparing for another 25% dividend and implement a permanent share buyback program? You might be very much interested in, right? So that's what I'm talking about Ethereum. So Ethereum is the most fascinating and compelling asset in the world at this point in time. And Ethereum is so many things at once, all of which is fed uh, of each other. And Ethereum is the blockchain, is a world computer, is a backbone of decentralized internet, which is Web3. Now you would ask me like, what is decentralized Web3? So if you go back and see the Web 1.0 have revolutionized the information, and Web 2.0 have revolutionized the interactions, and Web 3 has potentially a scope to revolutionize the agreement and the value of exchanges. And it changes the data structure as more and more people start joining and start incentivizing the network participants. So Ethereum is a world computer. Think of it as like a decentralized Play Store where you can build decentralized application. And Ethereum is bunch of things, like you have Internet of Money, you have an ownership on the Ethereum network. And the most commonly used is like you can build certain interesting application, make it a part of the community, and let people start using those application. As more and more people start using those application, the token price increases. So it's like you have a decentralized Play Store, you built an application, you deploy it, and then you get a native token, which is an ERC20 token. So Ethereum lets you build the decentralized power application. And Ethereum is a Turing complete. Turing complete means they are programmable like computers, and they can, in theory, do anything a computer can do, right? Although it would be more expensive and slow, because it's 100% decentralized and each and every node has to validate the transaction. So this is a trustless computing. And I think these are the two very important, and thus it's giving a thin line difference between Bitcoin, which was the first application of decentralized technology, which was challenging the feds and challenging the banks. This is challenging the large infrastructure. This is challenging the FANG companies who actually control your data. Correct? So if Bitcoin actually tries to be more expensive and more programmable, more like a computer, it actually does it because it prevents from attacking or hacking. And Ethereum, like I said, it's a decentralized way of building the application. It's a world computer, and it has a potential to definitely be the most valuable company, because it's a platform which allows people to build the applications which they can run it through a power of the community. So it's very fascinating to see how Ethereum has grown from 2015. I actually read the Ethereum's white paper first, then I read the Bitcoin's white paper. So that was something, and I've closely observed Ethereum's growth, both in number of application and the network, as it grew from having 10 applications in 2016 to about right now about like 6,000 plus applications onto the platform.
Got it. Hmm. And talking about India recently, Polygon or Matic has been picking up. What were the origins of Matic?
So you need to just look at, see, blockchains have the integral component, which is smart contract, right? So
So
smart
smart
contracts
contract,
are
if
not.
I'm not wrong, is anything that's built on the blockchain, any application that's built on the blockchain.
So smart contracts, so you have in the physical world or in the conventional world, you have legal contracts which are vetted by a third person. So let's take an example. Harish and I are getting into any legal arrangement, right? We would have a lawyer to vet these agreement. If anything goes wrong, then we would go back to our lawyers and say that Harish has went against the agreement. I wanted to file a case. Now imagine, since I'm talking about, there are no central authorities and central players. Now these contracts have to be digitized. So therefore, the concept of smart contracts came in. Smart contracts are nothing but like oxygen for blockchain, and these are like conditions written on top of a blockchain with no central authority monitoring it. This is happening everything in the decentralized system. So think of smart contract like a vending machine. You have different conditions, if else, right? If this happens, then do this, and both the parties will deposit some kind of a money onto the contract. If any of the parties try and violate it, or if any of the party loses that contract agreement, then the first party will get all the amount. So smart contracts are nothing but the concept of the usual contracts in a decentralized manner, and these contracts have the conditions which runs on top of the blockchain. Correct. So what was your next question about Matic, right?
Yeah,
Yeah.
correct.
So even so smart contracts got introduced with Ethereum. There was no smart contracts in Bitcoin, which means you cannot actually build the decentralized applications on Bitcoin. And even on Ethereum, which is most widely used smart contract platform, there has been no significant dApps which were built in terms of a mass adoption, because there is a utility which requires to build the application, decentralized application on Ethereum, and this has to be validated by each and every node. Correct. So decentralized network, like I said, you have miners. These miners are the one who keep up the network, and these miners actually validate the transactions. So essentially, when Ethereum was launched in a couple of years or 3 years, there were no dApps which were built having the large mass adoption. The reason was because the crippling of the entire network in terms of the high load which it cannot sustain. And on the other hand, there are few smart contract platforms which actually boast the transaction throughput, but they trade off the transaction with speed and decentralization. So there was a phenomena, either you can achieve a speed or either you can achieve a decentralization. And also many of these upcoming solutions proposed their blockchain neglecting the network of decentralized application. And somehow Ethereum actually failed to address the large adoption because it was not able to attain the speed. So Matic is nothing but a layer 2 solution which is built on top of an Ethereum to scale these decentralized applications by utilizing the concept of side chains. Correct. So think of it
Mhm.
like you have highway, right? In order to if there is a deadlock on the highway, there are ways which you can take as a bypass, right? And this bypass actually takes you to a region which is faster if there is a deadlock, if there is some kind of a issue in terms of the speed and other things. So these bypass are built. So think of it, these bypass as the side chains. So Matic is a layer 2 kind of a scaling solution which is built on top of Ethereum, and it actually utilize the concept of sidechain for off-chain computing while actually uh, ensuring the decentralization and giving the proof of stake validation. So proof of work is when you actually rent out your hardware to mine the transaction. Proof of stake is when you rent out your coins and increases the probability that you get a transaction basis the coins which you have rent out. So you're staking your coins. You actually give your coins to a network and say that I wanted to become a part of the miner, and if I get a transaction, I will validate it. If I validate a transaction wrongly, then my stake can be taken out. So Matic is nothing but a scaling solution built on Ethereum to actually accelerate the speed and accelerate the mass adoption, because with the speed you can actually build the decentralized application which have a large utilities, and it can actually try and tap into the most of the user, where Ethereum fails to address the scalability. However, some of the Ethereum upgrades which are coming, which will address these scalability issues. So basically, to summarize,
Mhm.
Matic is a scalable blockchain which is using the phenomenon of sidechain. It has a high throughput, which means you have 10,000 transactions per second on a single sidechain, which was comparatively very, very low in 3 digits on Ethereum. And the user experience was way better and it was developer friendly, and while having the security and the decentralization in place.
Got it. And I think recently Mark Cuban invested in it, and
Yeah.
then that sort of validated the concept even further.
Yeah, so actually, these guys started in 2017. Then they built up the solution. Nobody was buying in at that point in time. They did the initial exchange offering on Binance. They raised $5 million. Then I think the real game changing year for Matic was the last year when they rebranded themselves to Polygon. So with Polygon, they actually opened up the space where people start building up the decentralized application. And I think post COVID, I'm saying post COVID as in the time where we all hit by the COVID last year, and then after
Mm.
that. People started building in different solutions on Matic, and Mark Cuban invested because he's running an NFT marketplace. So NFTs are non-fungible tokens. So he's actually looking to deploy that NFT marketplace on Polygon, and it is definitely a good thing for an Indian ecosystem because we have built the solutions which are being adopted by the West. So it's definitely a big win for the community and ecosystem.
Correct. Yeah, that's true. And yesterday, Atharv, another one of my friends who deals with blockchain, he was saying that back in the 2000s, we Indians missed out on the internet, right? Like the Americans picked it up much faster and started building applications and software. And then India sort of became the outsourcing hub where all of the grunt work was outsourced to India. So, taking support calls or, whatever Infosys, TCS does, it's all low skill job in a way. But then during the blockchain revolution, which is happening right now, if India is at the forefront, then there's a chance that we'll be having a lot of more polygons in the Indian ecosystem, and we'll be sort of at the forefront.
Yeah, absolutely. See, over the past, if you would look at how economies have evolved or how systems were built, both of size and scale. First, the hardware systems were built by Intel and all those companies. Then, Apple and other companies built the hardwares where the computer introduction started happening. Then, after that, we started building the applications, right? With the
Mm.
application layer, operating system, and other stuff, we have seen it. Then, with the applications, we have seen the people started using the applications using the mobile phone and desktop, where we have seen Office 365 and other applications built on OS. Then with this data, you would have more people started using it. Then people wanted to actually give a personalized effect to all these application users. Then we have seen cloud computing, we have seen machine learning, we have seen AI. Now, the question is, would we see more Matex from India? Uh, Maybe not the exact solution, but some solutions which are built on top of these networks. So, how the growth of the cryptocurrencies, or how the evolution of cryptocurrencies and blockchain, which has happened? Uh, if you would see, the first was the decentralized currency, which was introduced, Bitcoin. Then more currencies start coming in the market, like Monero, Dash, which either were addressing the speed, or either were having the more number of coins, because Bitcoin only has 21 million coins, and out of which almost 19 million coins are already mined, and the last Bitcoin will be mined in 2140. So now you can imagine the block reward if it reduces after 4 years.
Yeah.
So after 50 years, if the block reward is one, then the price have to balance in such a manner that miners start making the money rather than losing the money. So which is why
Mm.
you see onto the internet, people say that Bitcoin will reach $1 million, and it's a high probability.
Correct. Mm.
So now coming back to the networks have already been built, right? So Ethereum came up with a network where you can build the decentralized applications, right? Like operating system was there, Windows and Apple operating system, where you can build different applications. So now the networks have almost been built up. Of course, there will be some more networks which can have a combination of public and enterprise, because you cannot leave the enterprise standalone. Now, there will be more solutions which will be built on top of these networks, which may have a potential to overgrow or outgrow in both in terms of evaluation and value than these networks. And we have clearly seen from the past as well. Somebody who have made the chips, the companies who have made the applications have overgrown
Yeah, exactly.
the companies who have made the chips,
Mm.
right? So Amazon, who have made the platform, have overgrown which the company who started with the internet evolution. So it's all about how you are able to address the mass adoption, how you are able to build the solutions where a large number of people can participate uh, while using these infrastructure, or you innovate and invent in these infrastructure and build the scalable solutions.
Fair enough. Yeah. I like the last point that you made, right? No one remembers Netscape Navigator today. They are the ones who opened up internet to everyone, but then
Yeah, yeah.
it's the other applications that are built which sort of touch consumers that's remembered and achieve
We can
scalable
clearly see with
growth.
Netflix and production houses as well, right? You have
Mm.
large production houses. Netflix have actually utilized these production houses, made a content which is now used in about 100 plus countries. So the
Correct.
more adoption started happening, and Netflix is more valuable than the production houses combined. So of course, infrastructure will be outgrown if there are utility focused applications in the world.
Fair enough. So you're saying more Indian startups will be building on top of the existing infrastructure to, sort of take it further.
Yeah, I mean, that's my take on it. Of course, there is definitely a possibility of building more scalable infrastructure solutions as well. However, I think there are already uh, more than enough infrastructures which are there, and I think it's now a time to build the applications from the perspective of the problems which users are facing. And if somebody can address and build design first scalable solution, both catering to the problem and both have the potential to grow with size and scale, I think those solutions will win in the market for sure.
Got it. Okay, now let's talk about one of the most trending coins, right? Dogecoin, which Elon Musk popularized. What were the origins of Dogecoin? And people call it a meme coin without any real value. Do you think it's going to sustain?
So you would be find funny that this coin was started as a totally as an experiment in the meme or in the joke economy, and
Yeah.
somebody who started has actually sold this coin and bought a Honda City, and right now this market cap of this coin is more than the Honda combined.
Yeah.
Correct. So this coin was particularly started as a joke or meme, and it actually started picking up last year. And you would not believe, me and my friends have bought $50 worth of Dogecoin 3.5, 4 years back, and we got so many coins. And in January we sold it for half a cent or less than that. So a lot of us made good money. But after that, it actually got uh, rise in both in value and adoption because of one person. Uh, he's Elon Musk, and he started tweeting about it. And he's when he started tweeting about it, more and more people who actually treat him as an influencer, or more and more people who look upon to him as an idol in terms of business world and the technology world, started buying these coins. So it's like the more people start adopting in terms of the utility, the price started triggering up. So Doge actually went from 1 cent or less than 1 cent to about 50 cent, 70 cent in last 1 year, and it was less than 1 cent. So it's completely a meme coin. There is no utility at this point in time. And if this coin becomes successful, trust me, the whole purpose of cryptocurrencies and blockchain will be lost. Why? Because there are different solutions who have put a lot of time, energy, and relentless effort in building the large infrastructures. And at
Mm.
the end of the day, the joke and meme coins actually start taking over these large infrastructure, which have a utility in terms of the real world problems in each of the industry. However, there are some stores in US, or there are some companies which have started accepting Doge, but I don't really see that Doge really has a future in terms of getting the large adoption. And if Elon Musk stop manipulating and stop tweeting about Doge, and I think we would see this coin settle and goes back to the normal. Right now, it's all boiling at this point in time.
Yeah. Time to make like quick money though.
Um, See, there are people who have lost money as well, Harish. A lot of my
Mm.
friends who have actually spoke about this speculation, and there is a community in Delhi NCR. So people have invested more than $100,000 when Saturday Night Live was about to happen. So Elon Musk did Saturday Night
Uh,
Live, and people expected that Doge will hit $1, and their $100,000 of investment is right now $50,000, $40,000. So
oh
a lot
my
of people
God.
have lost. So it's all about where uh, and which price you enter, and do you understand the cryptocurrencies where you're investing in. So I always say
Hmm.
that invest in yourself and invest in learning the cryptocurrencies before you start investing in these projects. So a lot of people call me and say that is it a good time to buy Doge? You can take maybe 2-3% of your portfolio allocation in Doge, maybe just as a part of a risk taking and reward. But I think for a longer period of time, until unless we don't see a larger utility, I don't really see that Doge has some kind of a potential. And forget about Doge, there was another coin, Shiba Inu, which
Yeah.
was which was actually invented last year itself in August. Uh, and Shiba Inu was nothing but a Doge killer. And they actually invented this new coin, which having $10 trillion coins in supply. So imagine, even if it hits 1 cent, we are talking about like $100 billion,
Yeah.
right? So that's the kind of a market cap we would be sitting on meme and all these coins. I don't really see that they have a success in terms of a marathon, and these coins will come and go, and they will actually cause some deforestation and winters to the cryptos. But over a period of time, we would see more sustainable, more scalable solutions will be the one who are addressing the use case, who are building the solutions, looking at the problem both of size and scale.
Hmm. Fair enough. That's what most cryptocurrency experts also say. That Shibu and Doge will just die away because they don't really have any utility, and it's just hyped. I just
Yeah.
saw
So
this.
imagine, like,
Uh-huh.
if you get a new stock onto the stock market, right, and it does
Hmm.
not really have any utility in the market.
Yeah.
Imagine if
Shell
somebody launches a
company.
stock. yeah, if somebody launches a stock and say that I'm selling air, right, and this air I would be selling to 500 districts in the country, and I'm looking at 500 million people buying this air, right? So the price would go from $10 to $100. But at the end of the
Mm,
day, if you want to read about what the company is doing, they're selling air. So you would say, you would try and question yourself and ask, like, air is freely available, how these coins or how these stocks will actually make money? So at some point in time, this is also a threat to the cryptocurrencies, because it is
mm-hmm.
becoming a red flag for the regulators.
Mm,
And with these meme coins and joke coins, I think the regulators are thoroughly watching this space. And once people make money, it's good for the community and ecosystem. Once one person start losing money, he'll start spreading the wrong word into the community. So I think we have to prevent it, we have to protect it. So I always say that stay away. Even if you want to do it, just maybe experiment with 1 or 2% of your portfolio, not beyond that.
correct. And someone just commented about trading. They're like, "Hey, I made $100 plus using trading." What's your opinion on crypto trading? Because even in the beginning of the live stream, you said you believe more in sort of the investment part of it rather than trading. So, how do you look at that?
See, trading is a great activity only if you have the right knowledge
Mm,
while you're trading in the market. See, trading always have two school of thoughts. One is fundamental and second is technical. And all those people who are doing a technical analysis or technical trading always look upon to charts, and these charts have different studies, and each studies have different meaning and different principles. So if you wanted to get into crypto trading, either equip yourself with these trading study templates which are there in the market. And once you have equipped yourself with these study templates, then you can start with maybe 10% of your portfolio, 5% of your portfolio. Because people actually look at trading that somebody else have made $1 million, and now I can also make at least $100,000. But trading actually comes with high risk and high reward until and unless you don't equip yourself with these study templates or keep up an eye. See, with trading, you actually have to be very much active, sitting in front of the screens. You have to track the moves, you have to track the market, or depending upon what kind of a trader you are, either you're swing trader, day trader, or you have some other trading strategies which you have developed. However, if you look at uh, uh, there is no billionaire in trading, right, who have made the wealth out of a trading, right? Even if you look at Warren Buffett, when he started Berkshire Hathaway, right, uh, there were three people. There was Warren, there was Billy, and there was third one. uh, uh, Warren and the other one were very confident that they will actually make the wealth over a period of time. And Warren have actually said that we knew that three of us will be rich and three of us will be wealthy, but the third one was in a hurry because he was trading actively. He was
mm,
leveraging the positions. So with trading, what happens is, first you will make money, right? If you have made $100, then your portfolio becomes $200. Then you will start trading with $200. Now, if you would lose money, let's take an example, 80%, then your portfolio will remain $40. So you are sitting on 60% loss of the starting price which you start. Now with $40, you will start leveraging. You will trade with $400. If you would make money, it's an upside on $400. If you lose money, then with $40, it will become like $20 or $30. So trading is good. However, I think if you're looking at a full-time engagement, or if you have time to sit in front of screens and track the movement, and you have developed an expertise, it's good to start with. However, if you're looking at passive wealth generation over a period of time, and with a sure shot returns on your wallet or in any kind of a form which you're looking at, I believe investing is a good source to make you wealthy.
got it. Where have you invested?
Well, I've been investing a lot. I mean, in cryptos and stocks both. So I started my stock market trading right after the college, and I've been investing in stock and cryptos both. I got into Ethereum very early. I've also
Oh,
invested in some of the ICOs as well. So I've been investing across different networks. I've been investing across some of the applications which I see having a large utility. But I definitely read thoroughly their white paper, their website, and looking at this problem. Therefore, we wanted to simplify it with moving what we are building, so that people don't really have to get lost in this complexity, and actually find cryptos more seamless, simple, and easy to understand, and they can actually track what their friends are investing, and by getting the right kind of a knowledge. So I invest across different sectors in stocks, and
Mm-hmm.
I invest across different utility coins, and also some of the networks in blockchain. So if I have to name a few, Solana is where I've invested. Avalanche is one. Matic, Ethereum. Then there are some more network which are coming up, and then all the solutions which are built on Solana, where I feel that it has a large utility and it can actually capture both the users and have the token appreciation over a period of time.
Got it. I think we can wrap this up. Maybe we can conclude by, a lot of people are still asking, how do you participate in the giveaway? So I'll just give a quick brief. There's this website called Moving.so, which Aman runs. It's a social media platform for crypto investors. The link is given in the description as well as in the pinned comment. So click on it, and you'll be seeing the details of the giveaway. They'll have two sort of tabs.
Yeah.
One of the tabs will ask you to sort of invite your friends and gift them crypto and give them a reason about why you're gifting them crypto. And the second one is a meme competition where you'll have to put out a crypto meme, tag them, and you might win $500 worth of cryptocurrency.
Yes, and you can also navigate to our Instagram from the website itself. I'll just share the link once again.
Sure.
So if it's visible on the chat, I just put it on private chat.
Yeah, here it
Maybe Harish.
is.
Great. So with what happens is you go over here, just to put your username and email, and start gifting free cryptos to your friends, and add an interesting reason while you're gifting free cryptos. And the better the reason, the more interesting it is, the more hilarious or more helpful it is for us to decide. We will give you 5,000 rupees of cryptos, and these cryptos will be of your choice. Second is the meme competition, which is happening. You can go to our Instagram page, create crypto memes, and you can create 10 number of memes, and you have a chance to win up to $500 worth of cryptocurrencies.
Awesome. So all the meme creators out there, go start making some memes and tagging them. And for people who want to give a good reason about why they want to gift cryptos to their friends, go to their website, type it out, and when are you going to announce the winners?
By end of the next week.
Got it. So by end of next week, you should follow them on socials. You should know if you have won it or not.
Fantastic.
Thanks, Aman. Thanks a lot for doing this.
Thank you
Has
so
been
much.
super
Thanks for having
insightful.
me.
Learned a lot
Wonderful
about
discussion.
crypto. Yep. Take care.
Looking forward to